Hi, now I'm going to talk to you on the subject of asset allocation in this video. A lot of questions are coming about the need to have asset allocation and what it means and how do I go about in doing asset allocation. I have seen number of investors coming to me and saying that I've invested money in banks, I've invested money in debentures, but the market has gone up, so I want to put a lot of money in equity. Somebody comes to me and say, prices is going up, so I would like to buy real estate property somewhere nearby Chennai. Can we say that these are all called asset allocation? The answer is strictly no. So what does it mean by means of asset allocation? All over the world, you can invest only in 4 asset classes. 1. Fixed income instruments. It means bank deposits, corporate deposits, your post office deposits, or any other instruments which gives you regular return or fixed returns. Second, I can invest money in gold. Third, I can invest money in real estate, whether it's land, building, or flats. And lastly, I can invest money in equity, whether it is equity direct or mutual fund equity products. So ultimately, we are talking about 4 asset classes to invest in. If some investor is able to put money in all the 4 asset classes, it means he or she has satisfied the condition that investments are diversified. What are the advantages of asset allocation? This is a general question being asked in an awareness program. The answer to it is, based on one's requirement, the assets are chosen. Suppose I want to invest 5 lakhs of rupees today and I need the money after 1 year for my higher studies. I cannot deploy this money in equity market. So what do? I cannot keep it in savings bank account. So I go to a bank, open a fixed deposit account, take whatever interest, 7% or 8% or whatever interest they offer me for 1 year. Why do I say so? Because my money is safe. Money is going to come back to me after 1 year, whether it is principal 5 lakhs or with interest of 6% or 7%, whatever we have entered into. At the same time, if I have 1 lakh, which I don't need it for 5 years or 6 years or 7 years, I don't have to put that money in a bank deposit for the simple reason I can afford to take a little bit of risk. What does it mean? Unlike fixed income, which gives me safety of the principal and return as agreed upon, the equity market is highly volatile. The market can go up or it can come down. So I'm not sure whether the market will be stable the next 1 year or 2 years, but based on the last 25 years history, I can tell you that the market is very, very good and it has delivered over 12% return the last 20-25 years. Is it an assured product? Absolutely no. Equity investing doesn't have any guarantee either for return of capital or for returns. So what do? Allocate some money which are for short term, maybe 3 years or 4 years in fixed income, and money which is not required beyond 5 years, put it in equity diversified fund or in equity. Then third, I want to put some money in gold. Yes, it's absolutely required. Gold, you can put some money. If it is going to be for investment, put it in a paper gold, or if it is going to be a consumption, buy a physical gold. And lastly, real estate. Real estate is a great option because people want to live in their own house, yes, one good house to live is more than sufficient. So this is called a simple asset allocation model which one needs to follow and which one has to see that they are able to fit into each of them at different age levels. Why I am saying this? When I am starting my career in 25 years, I will have some minimum income and I will put the money in bank deposits, or I start some money in a small way in mutual fund. I cannot look at real estate immediately at 25 or 27. I have seen people doing this, but it is not a recommended one. So you can wait till 35 to 36 years, then settle down in life and then look at real estate. That is a right option to do. So you must know where to put in your money at what age. So first is bank deposits. The second, you can look at equity. Then third, you can look at little bit in gold. And finally, you can go into real estate. Then the question comes to me, how much money I should put in gold? I always say the gold should have about 10% overall portfolio. It means I have 10 lakhs, that means 1 lakh can be go into gold maximum. You cannot put 5 lakhs in gold saying that gold is going to give me a great return. Yes, it's a great asset class, but we should know our limits. So keep about 10% in gold. That's very, very good option to look at. Real estate, yes, one good house is good enough. I don't think you should look at beyond. So where do I create wealth and how do I create wealth? This is a question comes very often. For that, equity alone is the answer. Although there is no guarantee of return, yet it has proven in the last 40 years how the Sensex has grown from 100 to 70,000 today. So it is able to deliver despite various information, news, war and so on and so forth, and change of governments in between. It doesn't matter to you at all. As long as the company is performing, as long as the company is making profits, the market will keep delivering. Now, as a allocation model, can I do myself or should I take the help of mutual funds? Yes, there are different models available from mutual funds itself. They themselves giving you various categories of mutual funds like multi-asset. They are giving you hybrid funds wherein depending upon your age, depending upon your risk profile, they give you a solution to it. So we can look at and opt for multi-asset funds which are abundantly available, which are tax efficient, easy to invest, and look at those kind of option. Now, is multi-asset a great option or a great scenario in India? At the moment it is picking up, I would say, but compared to other countries in the world, we are not caught up so well because we are always looking at two asset classes. One is gold and second is property. Our 50% of our investments are going into gold and real estate. Now, we are not here to decide whether it is right or wrong, but multi-asset strategy always help you better and better to create wealth over a longer duration. So look for good multi-asset fund. This can be done by talking to any of your good advisor who will be able to pick and choose more suitable funds which are available in the market. I am sure going forward, lots of people will start investing in multi-asset funds because of various uncertainties which are hovering around the world and in India as well. So to conclude, I would think the multi-asset is a great strategy in asset allocation, and asset allocation is a process which one has to follow irrespective of how the equity market is performing or the interest rates are offered by the banks. We should not chase returns and we should keep on rebalancing our asset classes depending upon which has gone up and which has come down. I am sure our returns will be stable and predictable in case we are going to follow a good asset allocation model. Thank you.